Hello traders, Gary Wagner here. 12:04 in Honolulu, 6:04 in New York on Friday. Happy Aloha Friday, as we say on the island. It is the 21st day of October, 2022, and this is the daily report for gold and silver, our weekend review. Gold had strong gains today, actually trading to a low of 1621.10, forming a double bottom from the bottom that we had at the end of September, and then closing substantially higher, up $26.70, over a 1.5% gain at $1,662.50. Now, one of the causes was dollar weakness. The dollar itself was down by 0.88%. It is currently fixed at 111.825. Another primary reason we saw such a large spike in gold, as well as rallies in U.S. equities, was because of an article by the Wall Street Journal titled, "Fed Set to Raise Rates by 75 Points and Debate Size of Future Rate Hikes." This went on to say that there were some officials that are signaling a greater unease with the big rate hikes to fight inflation. Their concern is how much it is contracting the economy. Silver had a really strong day today, gaining almost 4%, 3.80%. Back over $19 at $19.40 after factoring in today's gain in excess of 70 cents. It was a combination of a weak U.S. dollar, but mostly speculation that began with an article in the Wall Street Journal about dissension amongst voting members of the Federal Reserve that we need to slow down the pace at which we raise interest rates. If you look at our opening letter today and see how much the CME's FedWatch tool has changed in terms of probabilities for December, which has changed dramatically in the last 24 hours. I've just put up an excerpt from today's opening letter that explains that currently there is a 46.3% probability that the Fed funds rate will be between 450 and 475 basis points by the end of 2022 or December. Yesterday, the FedWatch tool was predicting a 75.4% probability. That is a tremendous drop in one day, and I believe it has a lot to do with the article by the Wall Street Journal itself, which takes us to today's dynamic $25 upside move in gold. What's most interesting to me is two things. First, that we saw a single article affect gold pricing and equity pricing that much, but more importantly, the identification of a pattern, and that pattern can be interpreted in multiple ways because I see it as a variation off of a few different patterns. In the end of September, we hit this low at about $1,621. The market then rose to just shy of $1,740, and then through this month, we've seen it come back down, and today actually retested that low, which held. And so to me, initially, I thought this was a tower bottoms. It's a candlestick pattern, but it doesn't quite fit that because for a tower bottom, you would need to see some lows with smaller candlesticks in between these two lows. Tweezer bottoms, which doesn't really work because that's usually two concurrent candles or three apart, but not this far apart. And then when I looked at Western technical analysis as a possible identification, I thought, well, for sure what we're looking at is a double bottom, but the definition of a double bottom is not built quite like this. It is a low, then you get a move up, a move down to a second instance of the low, and then a move up. In other words, it creates what's called a W. However, if that is a pattern, it has not completed the right upside move to finish. I thought, well, maybe it's a V bottom. And then when I looked at the V bottoms, it really didn't come in the same way. But here's what I can say. We definitely have support at this price point, one. Two, when I look at this pattern, what I see is in both instances, in both bottoms, we have variations off of Three River Morning Stars. And Three River Morning Star is defined as after a downtrend. We meet the criteria in both of these examples. You get a large red candle. You get a small bodied candle that opens below the real body of both the red candle as well as the green candle. In the case of this particular example, this is not in a star formation, but it is a variation. When we look at the next example, which is today's low, we're also getting that variation of a Three River Morning Star. We're getting a star formation like a doji candle, but again, it is falling within the real bodies of both the red and the green candle. Nonetheless, I believe that this could possibly signal a level of support and a price spike to the upside if we get a continuation of the fundamental discussion as we got today, that there is dissension among various Fed members, some being extremely hawkish and some calling for some sort of easing with concern that it will have a overwhelmingly negative effect on economic contraction, which is, of course, the end goal of the Federal Reserve. My sense is we want to listen intently to the November comments. This has been Gary Wagner wishing you, as always, good trading. It has been a most interesting week. We will talk to you on Monday for the next daily update and review. Bye-bye.